What's going on, everyone? My name's Obi and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on any videos, and also make sure you hit the like button because it really does go a long way in helping out the channel. So pretty much everyone is screaming that the sky is falling and that the stock market is about to crash. Does that mean I'm going to sell all my stocks and get ready to buy everything for pennies on the dollar? Well, that's what we're going to investigate in today's video. Let's start off with one of Wall Street's favorite tools, the Fear and Greed Index. So we're currently sitting at 58 points, meaning that we're 8 points off of the equilibrium. So by definition, this market is still greedy. But this means nothing without context. As of September 10th, this represents a change from extreme greed to just greed. And we're at the lower levels at that. So this means that more fear has entered the market. As of the last 5 trading days, put options have decreased by 54% compared to call options. So this means that most investors, including myself, still believe that the market has more room to run. Like I said, I'm no exception to this statistic. I actually played a longer call option last week. I ended up cashing out on my profits and putting the profits into my long-term portfolio, because I like to think of myself as a long-term investor. I rarely make options moves because it's easy to blow your entire investment if the share price doesn't reach your strike price by the date on which your contract closes. But anyways, the market is still way up from the March 23rd lows. And traders have a saying, sell in May and go away. But really, September has historically been one of the worst months for the stock market. So there's a lot of fear that's entered the market in September. There's a lot of people preaching that the stock market is going to crash, that we're going to experience a correction. But what am I doing as a long-term investor? And the answer is I'm just continuing to stick with my strategy, which is I'm continuing to invest. I'm continuing to keep cash on the sidelines so that I don't get caught without cash. And then if we do experience a correction, I can continue to invest and load up and average down. I'm not selling my stocks because stocks are a storehold of wealth, according to Dalio, one of the very few people that I actually listen to and acknowledge. I even read his book Principles, and that was one of my favorite reads, to be honest. The Fed has been printing trillions of dollars and money doesn't grow on trees. My belief is that this is likely to cause a lot more inflation in the future. Simple and plain, I believe that the currency will be devalued over time, more so than it has been in the past. The inflation target for quite some time now was 2%, and we didn't always hit 2% in the past. If you're in cash, then it shouldn't be a surprise to you that cash has been losing its value over time. You can't print more gold, you can't create more Bitcoin, it's a deflationary asset. Stocks also increase with inflation. Real estate also increases with inflation. That's because these are assets. The US dollar is the reserve currency of the world. So when I think about other countries who have their debt denominated in the US dollar, then that means fundamentally speaking that inflation is going to be good for them, because in reality, they'll be paying less on that debt if our currency is devalued over time. It's just logic. In terms of assets, I hold stocks long term. I hold Bitcoin long term. So knowing all this, I'm not jumping in and out of my long positions, even if there is uncertainty in the market, such as the 2020 election, potentially a second outbreak, and maybe just even a cool down from the August all-time high. Recently, the Fed has made it clear that their stance on monetary policy is that they have no problem overshooting the 2% inflation target. To better manage my risk, I always keep some cash on the sidelines, keep an emergency fund to cover expenses if need be, and go long on what I believe are good investments. I mean, think about it. If you had $10,000 cash in the year 2000, that cash would have lost about 50% of its buying power. So the same item that would cost you $10,000 in 2000 is now going to cost you about $15,000 in 2020. I can't imagine what it would be over the next 5 years if they do intend to overshoot the inflation target, or if that actually happens. This is just my personal opinion, my investing philosophy of how I think about stocks and investments as someone who's 1, young, and 2, has a high risk tolerance. I have the time to wait it out until my investments recover if things do go sour, and then on top of that, if I'm jumping in and out of stocks and the market never crashes, then I might have missed out on a lot of potential gains. So The best way for me to play both risk is to, one, consistently invest. So it's pretty much like I'm dollar cost averaging because I have money coming into the market every month. And then two, if there is a correction, that's when I can make bigger buys because I have cash on the sideline. But I just want to make it clear that none of this is investing advice. This is what works for my situation and for me personally. It's always important to do your own research and come to your own conclusions. But that's going to be it for this video. If this video helped you out in any way, make sure you hit the like button. Make sure you hit the subscribe button. Leave me a comment down below. And as always, thanks for watching. I'll catch you guys in the next video.